Okay, fair call. I'll spare you the call on Ola because I'm guessing it's very difficult to give a long call on Ola, and I'm guessing you can't go short on Ola because it's not in the derivative space. So I'll leave that, Kunal. But you will want to hear, Kunal, what the view on Ola is with the kind of really the developments that have happened. It is navigating a very challenging year marked by some serious service issues, regulatory probes, and multiple rounds of layoffs as well. So it's something, Kunal, that all of us want to know. But Kunal, if I can I just push you? With the limited chart data that you might have, is it possible for you to kind of give a gauge of where is it that Ola might be, let's say, a month or a few weeks or a couple of months down the line?
Yeah, I think if you look at the quarterly charts, that is the long-term charts, what I'm looking at. So it has been facing rejections at the higher levels on the quarterly chart at the 20 DMA, and it has been continuously we get bounced towards those levels, but then again there is a rejection. So clear-cut a downtrend is visible on the quarterly charts, and when the long-term charts doesn't look very attractive, the stock will continue to slide down further as well. So if you look at the Ola Electric, I think any pullback that could be possible because a lot of things have been discounted by the market. That is why already the stock is down from 155 to 50 levels. So a lot of things have been discounted. So you might get some pullback, but I think that pullback would be an opportunity to exit. We can expect further lower levels for Ola Electric. Probably on the technical charts, the downside levels, what I see from the current levels is somewhere around 37 to 38.
Now, like I said, right, a challenging year, a lot of issues, despite ambitious expansion plans and new product launches, facing consumer complaints as well. Tushar joins in to talk about the detailed timeline which reveals the hurdles or the speed breakers Ola has encountered on its journey to attempt to dominate the EV market. Tushar.
Good afternoon, Neeraj. So essentially the service problems at Ola Electric, which first surfaced in September, have actually snowballed into an avalanche of losses, so to speak, by the end of the fiscal. But let's actually rewind a little bit to the month of August. Ola Electric in early August became India's first pure play EV maker to list in India. The listing was great. What followed was actually a launch event by the company on the 15th of August called Sankalp, where the company first unveiled its electric motorcycle called the Roadster X. Things were looking even better when later in that particular month, the company actually announced its first earnings as a listed company, where actually EBITDA loss reduced. Thereon, the going has been really tough. In September, we actually conducted a ground report in Mumbai as well as Bangalore, where we came to know that thousands of Ola electric scooters were languishing at dealerships as well as service centers for want of repairs, service. Quality became a major issue, was emerging as a major issue in our conversations with customers of the company. That actually ballooned into October when various regulatory authorities, including India's Consumer Rights Authority as well as India's markets regulator, asked why these complaints are coming in. About 1 lakh complaints were registered by this time. To top it off, it's worth mentioning here actually that there was a spat between Ola Electric's chairman and founder Bhavish Agrawal as well as a comedian on Twitter regarding the service issues. Then, in the month of November, the first round of layoffs happened at Ola Electric, which was seen as a cost-cutting measure by the company. Almost 100 people were getting laid off every week on Friday for about 6 weeks since the listing had happened. So what people had told us about that time, that about 100 the laptops are getting deposited at the headquarters in Koramangala on a weekly basis. Following all these moves, actually, we moved to December. Ola Electric finally moves to fix these issues by expanding its network, the sales and service network, 5-fold to 4,000 outlets. But that actually became a sore point for its troubles going even further. In the month of January, when company launched its S1 range, or the third gen S1 range of electric scooters, that came along with, again, regulatory action around disclosures that the company was making. By February, the company had launched its electric motorcycle called the Roadster X, but that again came into question because the launch was delayed significantly. Around the same time, the company severed ties with its vendors to register vehicles. Now it started registering its vehicles on its own. That particular vendor, Rosmerta, went on to file 2 insolvency petitions against the company, but by the end of the month, that also was sorted. In March, things actually came to a head. The company actually started laying off even further. About 1,500 people were laid off. More complaints were coming on the trade certificates that were issued to Ola Electric stores. Most of these electric stores, about 3,000 of them, didn't have a mandatory document, that's the trade certificate, to operate a particular dealership. Along with it, there was a reported sales mismatch in the month of February. The company claimed 25,000 units of sales in February, but it registered only 8,300 or so. That brought it under the scrutiny of central government ministries like the Ministry of the Transport Ministry, as well as the Heavy Industries Ministry, because they are involved in the dispatch of the PLI that is against the sales of these scooters, of these electric scooters. Additionally, the cell manufacturing plans were also pushed back. That also attracted a penalty from the government. Come April, these issues started getting solved. But we also saw the roadster launch getting delayed even further into May. In May, the company eventually launched the Roadster X motorcycle, and now we are actually at the company's earnings that were disclosed yesterday. What goes on from here now? Bhavish Agrawal accepted the regulatory lapses at the company. It accepted that trade certificates were not issued, that there was a sales mismatch, and now it has delayed its EBITDA break-even timeline to sometime later in FY26 from Q1 FY26 earlier. Cell production has been pushed back until and unless the auto business gets healthy. The company is focusing on the auto business first, and then we'll move on to the cell business. But even before we look into the future, it's important that we break down the earnings. That is the major problem that the company has faced in Q4, the doubling of the losses on absolute as well as operational basis. Actually, my colleague Puneet is now joining us to explain those earnings further.
Well, thank you for that. So if we can just contextualize some in numbers as well for this. We've spoken about the story now. In terms of revenue as well, over the last 3 to 4 quarters, we've seen that consistent fall. And if you can show the first graph, from 1,600 crores odd, it's consistently fallen to about Q4 number of 649. And that's come at a cost as well as because of lower sales in this particular time. So when you look at the sales of the 4 quarters, from roughly 1,25,000 vehicles sold in the first quarter, if you can move on to the next graphic, it's consistently fallen to just about 51,000 vehicles. That's averaging just at 17,000 vehicles per month, from a high of about 30,000 that it used to do in a normal average for FY25. Lower revenue and lower sales should ideally work in lower losses, but that's not what happened. In terms of EBITDA, the actual losses have actually inched up considerably from roughly negative 9% margins to all the way 100%. So in this particular quarter, the expenses are actually at 770 crores and the revenues are just 600 crores. And that's showing the minus 100% in terms of EBITDA margins for this particular quarter. Finally, just 5 key negatives that I want to highlight and just contextualize that for this particular quarter as well. It's announced warranty cost of 250 crores in quarter 4. This is the 3rd consecutive quarter where the warranty costs have inched up. And essentially that is that if you purchase a scooter, if it's still in warranty, then that cost is what the company has borne. But that has increased dramatically. The company claims this is the last time for Gen 1 and Gen 2 models. But that will be something to watch out for. The second one is delaying the use of its own battery, as my colleague Tushar highlighted. That could have boosted margins, but now that has been delayed as well from the previous committed timeline of Q1 of FY26. EV bike deliveries again has been delayed. They mentioned that while deliveries have started last week, the vehicle is actually not in store for you to go and test drive as well. Delaying of the S1Z as well as the Gig Plus launch, again a key negative. This was expected to price just under 50,000 and open up the mass market scooters portfolio. We'll have to wait a committed timeline for that. And lastly, what they mentioned, EBITDA profitability, that's again delayed. Q1 for FY26 is what they had committed. They're now saying in terms of guidance, we can pull up the next graphic very quickly, 800 to 850 crores in revenue for next quarter of FY26. Margins will be minus 10%, but it will still be below the EBITDA break-even of 75,000. So they'll still report negative 10% EBITDA margins, but largely it's been a For the company, the IPO frenzy is now died down. They will also have to recalibrate and take note of the reality and recharge themselves going forward.